Asia stocks slip, tough to circumvent recession dangers. Sydney Asian shares slipped on Monday and Wall Street futures eked out mild gains amid issues. The U.S. Federal Reserve would this week underline its commitment to preventing inflation with anything rate pain was required. The euro confirmed little response after French President Emmanuel Macron lost control of the National Assembly in legislative elections on Sunday, a primary setback that might throw the U.S. into political impasse. Trade become choppy with the U.S. on holiday and Nasdaq futures see-sawed via the consultation to be final up 0.3%, whilst S&P 500 futures firmed 0.2%. EUROSTOXX 50 futures fell 0.3% and FTSE futures 0.2%. The S&P 500 fell through almost 6% final week to change 24% underneath its January excessive. Analysts at BofA cited this become the 20th undergo marketplace inside the beyond 140 years, and the common peak to trough in decline was 37.3%. Investors could be hoping it does now not match the common duration of 289 days, given it had not quit until October 2022. MSCI's broadest index of Asia-Pacific shares outdoor Japan misplaced 0.4% and Tokyo's Nikkei 1.2%. Chinese blue chips won 0.5%, perhaps aided with the aid of news. President Joe Biden was considering casting off some tariffs on China. Looming over markets are worries main principal banks will ought to tighten so aggressively to comprise runaway inflation that they'll tip the world into recession. Market volatility has remained increased, with the VIX index seeing the highest weekly close due to the fact past due April, a topic that goes past equities with a spike in FX and quotes volatility alongside wider credit score spreads, said Rodrigo Cattrall, a strategist at NAB. At this level it is tough to see a turn in fortunes until we see evidence of a material ease in inflationary pressures. Relief appears unlikely this week, with UK inflation figures predicted to reveal another alarmingly excessive studying that would push the Bank of England into hiking at a faster pace. Fed goes unconditional. A complete refrain line of vital bankers also are on the talking calendar this week, led by using a possible hawkish testimony from Federal Reserve Chair Jerome Powell to the House on Wednesday and Thursday. The Fed final week vowed its dedication to containing inflation turned into unconditional, even as Fed Governor Christopher Waller on Saturday said he might assist some other hike of 75 basis factors in July. With hastily slowing growth momentum and a Fed committed to restoring fee stability, we consider a moderate recession starting in Q4 is now much more likely than not, warned analysts at Nomura. Financial conditions are in all likelihood to tighten similarly. Clients are experiencing a considerable negative sentiment surprise. Power and food delivery disruptions have worsened and the outlook for foreign boom has deteriorated. The hawkish outlook is retaining the greenback at 104.420 and close to remaining week's two-decade high of 105.790. The euro became a fraction less assailable after the French election at $1.0524, however still uncomfortably near closing week's trough at $1.0357. The yen remained below extensive pressure as the Bank of Japan stuck doggedly to its super-easy policies while all its evolved global peers took steps to tighten. The greenback changed into constant at 134 yen and 98 sen, having reached its highest for the reason that 1998 last week. Bitcoin slipped 3% to $19,897, having bounced sharply over the weekend amid speak of an unmarried massive client. The power in the dollar has kept gold in a good sideways pattern for the past month or so, and it was ultimate stuck at $1,841 an Oz. GOL. Oil charges edged down once more after a pointy retreat overdue last week amid concerns excessive strength fees have been adding to dangers of a worldwide recession, which would in the end call for OR Brent fell 10 cents to $113.02, even as U.S. crude lost 27 cents to $109.29 according to Barrel.